I bet I've heard 20 times a week that I wish the housing market would crash. I'm ready to buy a house, but I can't afford nothing. I'm waiting for the housing market to crash so the home prices plummet and I can buy something. Oh, if that was so great in theory, that would be awesome for everybody. The only people that really win out when a housing market or a bubble burst or something crashes is the people that have cash reserves and high cash reserves. I think everyone's biggest memory of a home crash or housing crash was in 08, 09, back in those days. Back then, they were lending money to anybody and everybody that had a heartbeat. If you could fog a mirror, you could get a loan. Didn't really matter. Banks were grouping these types of loans together with good loans and bad loans and selling them off in bunches. And that's what really caused the crash, was they were basically qualifying people that didn't have the qualifications. This easy money inflated the housing market. So it was easy for everybody to get a loan, even if you didn't qualify. And that's what happened. Eventually, these non-qualifying buyers, it eventually just caught up to them. And then foreclosures started. And that's when the crash really started. And the only people that really took advantage of this was the investors and the people that had money and saw it coming and had the reserves ready to purchase houses. People are really wishing up these housing crashes and don't really think about what else, if the housing market crashes, why'd it crash? What else is happening in the economy overall to cause a housing market crash? Back in 2008, 9, and 10 is the unemployment rate. It's kind of hard to pay for a house if you're unemployed. Right now, yes, we know home prices have been bumped up, but they've been bumped up this time not because of easy money, but because of low interest rates. Everybody that could get, heck, I had somebody that got a 1.5%. Now they bought points, and which means you can buy down your interest rate, basically. Saves you over the long run. They got 1.5. I had somebody get 2.5. Several people got 3, which is great. But now we've kind of gotten spoiled and we think 6% is high, 7% is high, when over the long period of time, it's probably average. Although the only thing I can say right now is home prices are not average. Yes, they're bumped up, still inflated, until sellers and the overall economy catches up with the reality of, is demand still there or not? And right now it is. As long as demand stays there, home prices are going to stay where they're at. Although it does make me wonder, I wonder how many people got adjustable rate mortgages. Maybe they barely qualified, and with rising interest rates, are they still going to be able to afford the house after the interest rate adjusts? Even with higher interest rates now, a house is still a great investment, or if you buy an investment property, it's still a good investment. At least if you invest in realty, it's not going to crash the next day like you could invest in a company and then be bankrupt the next week. Now, obviously, the only predictions we can make is what's happened in the past and what we can see a couple weeks in the future, maybe. The problem is people are seeing where it's been in the past, 08, 09, 10, and they're expecting it to get back to that point again before they ever step in to purchase. The problem is, how long is that going to take? How long are you going to wait around, worried about paying 6, 7, 8, heck, let's say 9% interest rates when you're still renting a house from somebody and you're basically paying 100% interest? Yes, home prices go up, they go down, but overall, the average, they continue to rise. As a good investment, you can put in equity in your home by paying it down. You can put in equity in your home by fixing it up. There's 2 great ways that you can make an investment into your own future. Now, I know if you're a first-time home buyer, it's real hard right now to find something that's reasonably priced that you can afford with the interest rates and that isn't basically falling down. Banks don't like to loan on the ones that are fixer-uppers. Cosmetics, fine. Updating's fine, but a lot of times you'll run into something that might be affordable, but they need a new HVAC, it needs a new roof, and I'm sure you're more than capable of that, but the banks have to look at it as an investment, and they need to make sure their butt's covered when you're the one doing the fixing up. Now, as for sellers, if you've been considering selling your home, obviously supply and demand is where we're at here for buyers or sellers. High supply and high demand. Oh, let me say that backwards. A low supply and a high demand is going to bring you the best bang for your buck. Right now, our demand is kind of falling a little bit. I think we have a lot of people that either they've decided they can't afford a house, or we've had a lot of people that have been sitting on the fence. And what I'm afraid of, and I have clients doing this now, that they're, well, I'm going to wait and see. 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 Well, how long are you going to wait and see? Are you going to wait till it goes from 7 to 10%? I also have clients that don't want to buy an overpriced house and afraid it's not going to hold its value. But my opinion of that is basically, if you buy a $200,000 house, and in 6 months it's worth, I don't know, 180. You haven't lost money. It's just like the stock market in this aspect of it. You don't lose it until you sell it. So again, in history, home prices have never just went to zero. Over history, they've risen. So if you hold on to it long enough, yes, you're going to get that money back. It's just the people that have to sell or that can't afford their house any longer. Maybe they lost their job. Those are the ones that's going to be in trouble. The ones that are buying, maybe they're bumped up prices right now. If you plan to stay there for 10 or 15 or 20 or the rest of your life, who cares? I mean, you're not losing anything. And if you're renting, you're certainly not losing anything because you're not paying that landlord his mortgage, you're paying your own. One complaint I've heard from sellers is, yeah, sure, I see that my estimate has went up and my home's worth more now than ever. I'd love to sell, but I don't want to pay an inflated house on the next one I'm getting ready to buy either. That's understandable. And I've told people, like, look, if you don't need to sell or you don't want to sell, don't sell just because your home prices are bumped up. Now, if you're a landlord and ready to cash in, that's a great time to do it. Or if you're just somebody that's been at the same home for the last 30 years, you've taken advantage of this inflation, now's also a great time to sell because you're taking in all that equity to put into your new house. So what I'm seeing for the housing crash that's to come is more of a leveling out. I think we have a steep incline, obviously, supply and demand. October the 5th, there were 69 price reductions in our market. That seems kind of high to me. And the problem is a lot of agents aren't looking at or not explaining to sellers that, yes, we go off past history to do our comparative market analysis to determine what your home's worth. But the problem is we're looking at inflated markets in the history. We need to look at where it's headed, not where it's been, to try to determine what your home's value might be 30 days from now, 60 days from now. So if you're thinking about buying or selling, I'd love to hear from you. And until then, take a look at these videos and I'll see you in the next one. Thanks.